Hello everybody, welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live training session. I'm here to educate and inform you on the proper use of Hawkeye tools on the live edge of the market. If you have any questions or comments, over here on the right hand side of your GoToWebinar control panel is a questions pane. Please enter your question or comment there. I'll be more than glad to get to them in the order that they're received. If there's a product or an indicator that I show that you do not understand, make sure that you let me know. I'll be more than glad to go into more detail on its application use and setup, how you can use that. And in the meantime, I'll be looking for any type of trade setups. And if any trade opportunities present themselves, then I'll be more than glad to hop right on board and show you how it's done. Just let everyone know that we are here for educational purposes only, that all information that we provide is for education and training. We are not registered trading advisors, so we cannot give you any trading advice, or we cannot suggest whether to buy or sell any of these instruments. But we are here to educate you and show you how to use Hawkeye on the markets that we do look at and trade. Make sure that you understand how to apply and develop a trading plan that can help you to be consistently profitable. Past performance is not indicative of future results, so make sure that you use common sense when you're trading in these markets. Always get advice from a competent financial advisor before investing your money in any of these markets, because like most markets, there's a huge potential for reward. In trading these, there's also a huge potential for risk. Make sure that you understand the risks, be aware of all of them, and you are willing to accept these risks in order to invest in future stock, commodities, forex, or options markets. Please don't trade with money that you cannot afford to lose. Make sure you never, ever, ever trade in a live account until you have first proven you can consistently and profitably trade in a simulated account. And then and only then can you start the ardent task of trading live and with the proper mindset. Good morning, David. Great to see you here. Everyone else, glad you were able to join me today. I'm looking at the Dow Jones market, the YM specifically on NinjaTrader platform. You can see that the opening trend is a little bit short. Overnight, we had a high come in from yesterday, and then it just plateaued out. And you could see that the retest of the prior zone gave us a down push that was traded from the European session this morning. When London opened right here, traded off sharp, plateaued, and then traded off sharp again. And so we're looking for a potential rebound. You can see that the price traded back up to the prior zone. So right now, that is a high probability reversal off of this open. So we were able to fill in that. If you look at the prior close and the prior open, then you can determine whether there is a gap present or not. But right now, we're looking for a potential for a reversal based upon the Hawkeye zones. This is a high probability reversal location, so if this were a true reversal, then we're looking for the target to be back down into the low side support. That value just happens to be 25,152. That's to the low side. So I'm sorry, did I get the right one? Yeah, I got the wrong one. 25,236 is the first support. If a 25,210 is broken, then we are aiming for a 25,152 to the downside. However, we are currently in the current supply zone, which is denoted by the red labels. So the red label shows us supply, the green label shows us demand. We're currently hitting and testing the 25,314 level. If that holds below 25,346, then we are looking for a retracement and high probability reversal back to a 25,236. Just like when we saw this price action line formed, right here, price hit it. High probability reversal that would go right back up to the prior resistance, and that was this one right here. So prior supply zone based upon this demand zone, and you can see within 4 hours price was able to retrace right back up to that area. So again, these indicators show a high reliability on identifying trend reversal points, on identifying supply and demand regions that you can use in your own trading. Okay, Hawkeye volume on the 3 minutes showing that we have a nice hook pattern formed, an extension up with a very quick reversal down. So we're looking at volume starting to push this market in the opposite direction, which plays in line with the reversal that we were looking at. Using the Hawkeye tools just makes it easy because understanding volume shows you what the market's intent and what the leading edge of the market is trying to do on pushing the price where it wants to go. And then retail traders happen to fall in line, get caught on the highs of the day. A price action like this, price pushes up into new highs, then pulls back really quickly. They're trying to trap retail traders at the highs of the day. They're trading it off really quickly to trigger any stops or to try to get people shaken out of the trade. And then they either will start buying back again, and we'll see that with volume, or they'll continue to sell off without you and then go in the opposite direction. So those are all synopsis. Those are all probabilities that we are looking at. Just like in any trading adventure, you're trading probabilities and you're trying to minimize risk at every opportunity. So you always want to put yourself into the highest probability trade. The probability of the trade continuing down is right now based upon our supply and demand indicators. I am not assuming. I'm also not trying to determine where the market's going. I'm trying to read and understand my indicators, and using technical analysis, I'm trying to put myself into the highest probability position on that. Looking at the fat boy, I can see a 3-minute fat boy showing me a nice decline in the Dow Jones right now. So I can see the Dow Jones, the mid cap, the S&P 500 are all in this right range, but they're all decorrelated. So that means, and see the NASDAQ looks like it's opening with strength. So that tells me that the market itself is looking like it might be a little bit choppy. So we're watching for that. That means what I mean by choppy is that it could be range bound, it could be staying within the opening range for quite some time before it tries to either break out to the long or to the short side. And so we'll be watching for that. The indicators that I'm using right now, we're looking at the Hawkeye trend. The Hawkeye trend is a tool that identifies the direction of the trend based upon color. So a green trend dot identifies an uptrend. A red trend dot identifies a downtrend. White trend dots are neutral. They're saying that the trend is not strong enough to be identified up or down. It also identifies regions of congestion where you're trading sideways and you probably should not be taking trades. Or if you are, you should be holding those trades until you see a clear direction. And then when the clear direction is determined, then the trend dots will change either green for up or red for down. The lines that you see above and below price, these are the automatic trailing stops. Right? So if you see price coming down to a specific level, then you can determine whether that is your stop level or not. The stops are designed to hold you in the trend and to keep you in the trade while the trade is developing. So it's much more of a longer term trading aspect. So even on a 3-minute chart, you're still looking for several hours of holding for that trend. You might even be in it for an entire day based upon the trend itself. Looking at the London session and the London Open that came in this morning, you can see that the trend changed right about 1:30, which was pre-market to the London Open. So very clear indication that the weakness in the market was coming in. This indicator right here is the Hawkeye Roadkill. Using the same indication here of trend, it identifies the trend, but it does it on the longer time frame chart. So we're looking at a 3-minute chart here. This roadkill is identifying a harmonic longer time frame chart. This one is a 6 or 2 times a 3-minute chart. So if I were to format that, then you can see that I am looking at a 6-minute time frame on that roadkill. And that roadkill is identifying the trend of the second time frame, and it is identifying the volume of the second time frame. So with this indicator, I can see trend, volume, and with the higher time frame heat map, I have all three of my longer time frame data available to me so that when I see a trend occur on my shorter time frame, when the longer time frame agrees, then I get a signal dot that confirms the trade. I also have a redundant roadkill on here. This is a second instance of the roadkill loaded onto the same chart. This one identifies the longest time frame. It is a 12-minute chart. So the first one was 2 times 3 or 6. The second one is 2 times 6, which is 12 minutes. And 12 minutes is also a multiple of 3. So 3 times 4 is 12. So you can see all three time frames are harmonic in time. Also, this one shows trend and volume of my 12-minute chart, but I've elected to not show the, see here it is. See right here, the trend. I've turned it off so that all I'm looking at is the volume. Now I can leave the trend on if I want to see that, but in this instance for my entry and exit method, I don't need the trend to be identified on the longer time frame. I'm only looking for volume. And when volume is agreeing with me on all three time frames, that's the key. And so that's why I have that. So the indicators are set up to be turned on and off, so you can use it however you like. It's a key point to see that. So when you see all three time frames align, like you see right here, so if you're looking for the alignment, this was the first time it was aligned, but at that point you can see third time frame volume was not good. Right here is the first time where you see all three aligning, where you've got trend, volume, here's the trend, here's the volume and the heat map on the first time frame. Second time frame volume and heat map are good. Third time frame volume is good. So that is your initial trigger. That's your initial trigger, and the trigger bar is followed by the entry bar right there. So that would have gotten you in if you're just simply following and waiting for that. Yeah, three bars later, but that still gets you in at a great point to have taken advantage of the move in the equity, or in this particular case, in this instrument. Following either the Hawkeye levels or the trend stops, then you would have been either stopped out here, or you would have taken profit and stopped out based upon your level rules. John says, what are the three time frames again? 3 minute. 3 minute times 2 is 6 minute. 6 minute, and then 6 minutes times 2 is 12 minutes. So I've got a 3, 6, and 12 harmonic time frames. Okay, re-entry on a trend. You can see right here that the longer term trends all went out of trend, so there's no roadkill per se, but this does identify a trend change. So when you get the initial trend dot, you can see longer term trend was already short. The longer term volume was already in place, so all you needed to see was your initial trend dot, volume, and heat map, and then that gave you everything you needed to re-enter that trade right there. And then to continue with that trade coming down into this. So if we were to turn our levels back on again and place that on the initial trigger point, then you can see based upon our level rules, then I was able to go and take a level 3 and a level 5 profit well before the open of the market. And then I would have been able to ride that all the way back down and even been stopped out, having only risked a very small amount. Now, if those values are too close for you, you can always go into the indicator itself. If you're to go to your volume, oh, there it is, levels ATR, then you can define the profit factor and the stop factor based upon the average true range. So right now I have the profit factor set at twice the average true range. Now, pre-market, there's not a lot of volume. So if you're looking at trading at this time of day, then you can see that your average true range values are going to be much, much smaller. However, placed on the second entry point right there, then you can see the expansion is considerable, and this looks like a very good placement for the stop relative to the Hawkeye stop. And then as the trend progressed, you can see a level 3 was hit almost right out of the gate, level 5, even a level 7. So you got response very, very quickly off of that. If you have multiple contracts, then the levels help you to not only manage those multiple contracts, but to help you to limit your risk in the trade by keeping the stops at least 2 levels prior to the current price. So a close below level 8 means our stop is at a level 6. So a pull back and a touch at that level could trigger your exit, or if you're waiting for a close above the level, then you would have exited at this point right here. You wait for that price to close at that level, and then you exit whenever price closes above the previous level. So you have full liberty to define your trading plan based upon your own risk parameters. I'm just showing you the options that you have and how the tools are used to help you as a trader to make the most of the trends that are presented. All right, Johannes is new here. Welcome. Thank you for joining us. How can you use the Fat Man and Tomahawk scanner to identify a perfect trade? Okay, very good question. Let me pop over. I don't have my Tomahawk charts set up right now, but I can get them set up really quickly. This is the MT4 platform, so let me go and pull up a Tomahawk screen setup. Australian dollar. So what this will be doing is it'll pull up the Tomahawk scanner. It'll identify 3 time frame Fat Man, 1 minute, 3 minute, and 8 minute. And hope it's not, there it goes. Here's a 1 minute, 3 minute, 8 minute Fat Man to identify setups. So each one you can see you can change the time frames based upon that, the base time frame. So this gives me an M5, but if I put it on M1, then it pulls me back to an M1. Here, this is a M1, M3 time frame, but if I change that one to a 5, you can see it also just simply changes to a 5. And then here's an M8 time frame. So cycling that also gives you a switch between the time frames, but we're looking at fixing this to an 8, 3, and 5. So base is an M1 on all 3 charts. Also, the scanner is also set up to be an M1 time frame, so you're looking at, these are scans based upon the strength of the trend for 1 minute, 2 minute, 3 minute, 15 minute, and 60 minute. So we're looking for short and longer term strength. And we can see right now, Australian dollar is starting to come in relatively strong, especially against the pound and the euro. You can see a little bit of strength on the yen. A little bit, it is a lot stronger than the dollar. Looking at the 1, 3, and 8, you can see definite trend of strength in the Australian. Here, the Australian has overbought and now cycled back down, is starting to trend back up. So that's trend of strength, trend of strength. Longer term, elbow, trend of strength. So those are all good, 3 good indications that you're going to continue with Australian dollar strength in the shorter term charts. So you can see from the color codes that all 3 of the The main signals, the euro, the US dollar, and the pound are all trading very nicely against the US. I mean, against the Australian dollar. You can see it is also very strong against New Zealand, and that one's also trending very nicely. So you can see anything, the red color code identifies the strength of the Australian dollar. It's always going to be red. The euro is always going to be green. US dollar is always cyan. So you can see based on volume and trend the strength or the weakness present. And you always want to take advantage of that strength and weakness. And when the trend change occurs and you see a breakout after a period of consolidation, that gives you the opportunity to enter the trade and take advantage of that. So that's the way that we want to identify that. When you see longer term strength and then the shorter term strength cycle in and out of weakness, that's the good setup. And when you see the fat man turning to all three time frames, a clear directional trade, then those are great setups. And the Tomahawk system is ideally suited to show you that. To identify the strength of individual pairs and the weakness of individual pairs and how to capitalize on those. We can see the same thing in the euro charts as well, or the yen. The yen yesterday gave us that same thing, so we were trading off the yen considerably yesterday. Yen versus any of the other pairs. So the yen dollar, the yen pound, or the yen euro um, look very good right now. Okay, Johans, I hope I pronounced that correct. Within the Tomahawk, you have the Hawkeye trend, the Hawkeye volume. You get volume radar. You also have the Hawkeye volume paint bar. It comes with the scanner and multiple time frame Fat Man. All that is included in the subscription. It also comes with the trader. So there's the, let me see if I can pull that on here. Yeah, it comes with the EA, the Hawkeye Tomahawk Trader, that you can simply place on the chart, define the contract size and the risk, and then it allows you to go through and trade the particular chart based upon your current metrics. And so here is your entry point. Let me see where that, here's my stop. So if I were looking at taking this long, then my Hawkeye stops are right here. And once that breaks long, then this is going to be my profit target. So based upon the current setup, I'm looking at about a 1-to-1 risk reward. If it looks like going any higher, this might not be a good setup to get into because the reward doesn't give me as good of a reward that I want. So you can analyze the trade before you take it. And once you click the buy button, then it'll automatically give you an entry based upon the risk parameters that you had set up. So if you go into the expert advisor and look at the properties, then you have defined based upon a full contract size, you said you have a risk of 0.005% of your trading account. So if you have a large trading account, this number is going to be relatively small. If you have a small trading account, this number will be relatively large. So this is based upon a percentage. So I'm looking specifically at 0.5% of the account will be put onto that trade. And so it will automatically calculate the lot size based upon the contract size, the contract risk that I have. If you want to short a trade, then all you do is just place your target below, and it will automatically give you set up for that. So put your risk above price, put your target at a specific point, and then it gives you a nice signal to sell. All right, let's go look at that yen because it looks really strong. And I would assume that it would be trending very nicely right now. This is a 1 minute. I could pull up my 3-minute charts as well. That's the other nice thing about Tomahawk is Tomahawk is set up to run any standard MT4 time frame, and it can run any standard MT4 non-standard MT4 time frame in real time. So I could set this up to look at my 3-minute charts as well. But looking at these, you can see the setups and the trends have already gone 1, 2, 3, 4, 5, 6. So looks 5 out of 6 are trending nicely. The Canadian isn't trending so well because the Canadian yen looks very choppy. You can see the Canadian dollar on the shorter term is nice relative to that yen, but the longer term you can see they're both trending in sync. So shorter term, I would be looking for that strength to come in. So right now we've got really nice strong trends in all three of this yen. The yen is very, very strong compared to any of the other terms, especially that pound. And look at the response to the pound is the response to the euro. Both are really, really nice trend lines. And they do look to continue because we do have nice strong yen on the longer term as well, especially on the pound because the pound itself is weak not only in the short but in the long term. So we'd be looking for those. That pound is extremely weak, 1 and 3 minute, and it's looking like it's starting to trend down nicely on the 8-minute as well. So we would continue to look at and hold these short as long as we're continuing to get volume supporting that, then we'd definitely be in that. And the scanner is the one that shows us that. Good morning, Chris. And Ninja Trader. Okay, let me switch back over to Ninja Trader. In Ninja Trader, how do you get the dots to be on top of the bars? I didn't know that there was an option for that. I thought they just always drew that way. But let me see. I'm not sure. These trend dots are definitely on top of the bars. I don't think I did anything to get them to do that. If there are any properties that you can come up with, but I'm not sure. If I were to format that indicator, there's nothing in here that says to draw on top of price. I'm not sure. That I'm not sure. Chris, are yours displaying behind your price bars? Yeah, so they're still trading on the top. Well, I'm not sure what that is. I don't think that there's a way that I know of that can be set to do that. So maybe you can contact, maybe you can contact NinjaTrader to find out if there's a property for the price bars to be either in the background or the foreground. Because as far as I know, everything that we plot is going to be in the foreground. All right, during that discussion, you can see the price action of the YM did exactly what we expected it to do. High probability reversal off of the zone, push back, hit the very first target, 25,238, almost to the T. So that's the value of knowing volume. That's the strength of volume price analysis. And that's the strength of our zones using the tool set. So if you understand volume and price together, then you can understand the relationship, the intent of where market is trying to push itself, and then how you can profit from that. So hope you that was instructional, and you got as much out of it as I did. And Marcel, thank you for sharing that. The yen definitely is trending strongly. So we were looking at futures here on Ninja Trader, but let's go over and look at some forex. I know there's a lot of forex traders. We're looking at that. We were watching the euro US dollar longer term, but the yen's the one that's pushing out. I'm looking at my 45-minute fat man, then I can see that I do have a nice strong euro, but it's overbought. I'm looking for that potentially to start turning and a dollar reversal here. So the longer term trends, I'm looking to try to take advantage of a overbought euro. We are getting some longer term signals that show us we've already peaked into an overhead resistance. We're getting selling pressure, and the direction of that trend is already starting to go down. So if we were to continue in that direction, then obviously our target for that will be the 1.1955 level. So we're looking for price to get down into that low side demand zone. If this demand zone doesn't hold, then we're definitely going to be revisiting the gold zone that's just below that. It might not be a straight shot because we do have quite a bit of stuff going on in between there. So there was a prior zone right here. It might form a whole brand new zone there as well. It might trickle back and forth between the two, but we don't know that until we see what price does and how it's going to be traded. But that's an overall picture of it, and that's what the indicators are telling me right now. Based on the shorter time frame, a 30-minute, 60-minute, looking at that 30-minute, you can see that the 30-minute has already turned, has not come out of an overbought range, but we can see that that trend is down and that the trend of the dollar is still very nice and strong. George Kinney brought up a point. He wanted to bring it up for Chris. He said that, let me share that real quick so you can see that. And I'll share it with everyone. But George brought up a question about that. He said about the dots. If you have a displacement value showing his indicators. I'm not sure what that means, George, but hopefully he does. Hopefully he does. All right, so let me go over and pull up the that Aussie yen we were looking at earlier, or maybe even pound yen. Shorter time frame obviously is going to be trading a lot faster, but we're looking at much longer trends. So you can see based upon 15, 30, and 60-minute trend values. All right, you can see that the yesterday at the open of the Japanese session, the Tokyo Open, there was a pretty large sell-off, stabilized through Australian Open, okay, and then prior to the London Open, you saw a lot of weakness coming in, but then right around lunchtime, London time, pre-market U.S. Going into the U.S. Open, you can see that there was some profit take. So when you see a nice trend channel producing that and then volume starting to step in saying that this is exhausted, we're starting to see profit being taken. Strength of buying the euro now has returned. I mean, buying the pound has returned based upon buying the yen. So people now are trying to take profits out of the market. This is a great opportunity to take profit out of the market and to just allow your runners to continue to trail on that. So Hawkeye is showing you the market intent and what the market's trying to do, and after such a large pull down. All right. You can see based upon the 60-minute setup that we are in low side support, so that gives you a really good view as to why price came to that level and why it stopped. And you see the formation of the pivots are giving us really great consolidation zone parameters. So you can always connect the dots per se to show you a nice consolidation zone, and that is actually defined by the Hawkeye zone, showing you that there is clear supply and demand developed in that region. So it's going to probably be consolidating here for a while. And let's see if we're going to get any direction from that. Right now, I don't see anything explosive to the downside because there's quite a few tight zones there. If it does rebound back up, then I would look for a first retest of the upper supply. That upper supply value will be 151.83. So that would be the highest probability retest. But we've got to break a 151.12 first. 151.12 is broken, then you're going to get an extra 60 to 80 pips out of that and on the move back up. That's not for scalpers, that's mainly for trend traders. Trend traders are looking at holding these trends and taking advantage of the reversals of those in the directions that they trade. Sound good? Yeah. So the Hawkeye Fat Man, the Hawkeye Trend and Stops, the Hawkeye Volume and Heat Map, those are the core tools that we use in our three-step entry-exit method. The Hawkeye Roadkill tool allows us to see the longer time frames on the current chart so we don't have to constantly be looking at all the other charts, although I like to look at the other charts because they help me to see the current status of the chart, whether it is in trend or if it's in congestion or if we're looking at a potential reversal. So it's there. So I'm once I see the directional intent based upon the Fat Man, then I can just open up the chart. I can look at my roadkill and determine position, entry, exit, and re-entry criteria. Very, very useful and very easy to do once you have a trading plan established to take those trades. Okay, any other questions we've got going on? Otherwise, I'll be looking for other setups in the market here. Yeah, you could be seeing some stopping here. The yen is showing some shorter term weakness on that. We're starting to see a trend of strength on that pound, but it's also starting to stop a little bit. So this looks like a really good stopping point, not only from a volume perspective, but from a supply and demand theory approach as well. So this looks like it's going to be here for a while, so we can be looking for other setups in the meantime. That Euro US dollar reversal trade looks promising. The Canadian looks like it's extremely weak, and if it does turn, then we might be looking for some potential trades off of that Canadian as well. The Swiss franc and the euro both are extremely overbought. So a nice strong dollar trending relative to an extremely oversold US dollar. You might be looking at trading any of these that are trending against that US dollar pair. Those are all potential trade setups that we'd be looking for. Looking longer term at equities, we know that today we have crude oil inventories up at in about half an hour here. All right, so if I were to pull up the longer term time charts, then you can see that the Hawkeye not only is very valuable for trading short-term or intraday charts, but it's also extremely valuable in longer-term trade setups. So I'm looking at daily, weekly, monthly time frames. If you're an equities trader, those are the best time frames that I know to trade the equities. And if you're an options trader, then trading equity options using Hawkeye is extremely profitable on identifying the underlying trend and taking either call or put positions based upon that trend direction. So one asked a question, could I show the pair US dollar Swiss franc on 4 hour. Okay, let me go over to MT4 and I'll do that for you. All right, let me pull up a profile that I have set up here that'll help to identify that. So I'm looking at trend volume and heat map. This is the 1 hour, the 4 hour, and daily chart setup. This is what we were looking in when we were identifying the Aussie yen longer term. To see that, you can also see quite a bit of information. These are really nice charts to study, to identify entries, parameters on establishing criteria for your trade plan and so forth. So these are beautiful charts to study if you're looking at that. But you want to look at the dollar Swiss. So let me look at the US dollar Swiss franc. Here it is right here. Let me pop that in. US dollar Swiss franc and US dollar Swiss franc. So if we're looking at trading the hourly, then here's the 4 hour that you were interested in. The 4 hour chart shows a really nice setup of the dollar against the Swiss, but then you have just the opposite on the daily, where you have an extremely strong Swiss with an extremely weak dollar. But you can see shorter term within the day that weakness has already gone to strength and is already starting to trend back down. So right now you're seeing a trend of weakness on the US and strength from the Swiss, but we know longer term that that Swiss franc is overbought and high probability that it will continue to weaken. So this can easily cycle back down and cycle back up. That's tradable in the shorter term, but in the longer term, it looks like the overall direction looks to be down. So you can see the overall trend is already down on the daily. Clear signal at the top of the market that this direction was over and that the highs had been made. A retest of the previous high. Okay, just like always, anytime you have prior resistance, i.e. a supply zone, then you're always going to get retested. So always watch for the retest of those things. Okay, it's a really good, really clear way to identify those types of uh, regions and to identify the strength of supply and demand. And of course, I don't have my zones on here, but this looks like a really nice supply zone where this was the first retest of that supply zone, which becomes the high probability reversal for it to return back down to a demand zone, either here or even to here. So that easily could have done so right in there. So daily, the 4 hour, looking at the 4 hour trend, the overall trend is down. It came back up. Now it is trending long, but you can see that with this current price bar, it has just switched over and shown a very strong push towards weakness. And you can see that the fat man is identifying that also in that traded direction of weakness. Okay. So the fat man here is showing the trend is to strength, whereas this one here is showing the trend is to weakness because you're looking at the dominant pair. The dominant pair. And then in the hourly, so H1 chart, we are currently in an uptrend, but the current price action at the open of the market gave us a big push down to consolidation. We've got to see that that's going to hold. If it does not, then we'd be looking for price to come back up again. The volume doesn't look real strong here, so it's just stabilizing. Wide bar, you can't take a trade immediately following a wide bar. Price pushes back up into the body of the wide bar. Then you wait for that wide bar to be broken if you're looking at trading it. So is that what you were looking for, Juan? I was going to show my longer term chart. Good, I've got crude oil up on this one already. I've been following crude oil for quite some time here, but ever since Christmas, you can see the amount of volume that started coming in prior to the end of the year. So you can see that the monthly charts give us a real clear indication of the longer term push towards bullishness in crude oil. Okay. We also saw from last year from our fat boy indicator where we have the crude oil, gold, the NASDAQ, the mid cap, this could be the Russell, the S&P 500 and the Dow Jones all plotted together to give us relative criteria for either correlation or strength. So I'm looking for extremely overbought and very strong versus extremely oversold and very weak instruments. And this is a very nice tool if you're a pairs trader, if you're looking at trying to show disparity between tools or indications. And we're finding that this is starting to become a very, very nice tool in identifying cryptocurrency pairs, in trading those, and in looking at the money flow from one crypto to another and so forth. So it's becoming a very valuable tool that not a lot of people in the industry are able to take advantage of, but at Hawkeye we are. So we can see the crude oil here as shown a very, very nice trend of strength from beginning of December all the way up to the current time and is continuing to strengthen. So based upon that, you can see consolidation range here is a nice little cup and handle pattern which was broken, given a confirming Hawkeye trend entry point on the break of that and a continuation of that up into the current time where the trend dots are continuing to stay green, they're continuing to rise, they are equally spaced, prices staying well above the Hawkeye trend dots, so there's no reason to even consider exiting the trade until you see any type of violation of that trend. You can see that volume is continuing to rise and that volume is continuing to be strong. So watch out for a blow off volume bar. If you see price getting up to a new price levels like we're seeing now and volume, extreme high volume bar coming in, then this could be signs that we've reached a short-term peak and we might be looking for corrective action. This is the type of idea that you'd be looking for. When you see big pushes and then you see a false attempt to break out, this price action failure results in a correction. Once that correction is broken, then you are able to re-enter that trend. Okay, and here we see it again. You can see a big push up, you see some correction, and then you see that correction is broken and a new push up. If that fails repeatedly, then that becomes a larger envelope that when it's broken, then you can have a confirmed trend entry, and Hawkeye still is able to identify that too. So Hawkeye tools are here to help you to identify that, whether you're trading longer or shorter term. So because the daily is longer term long, when you're trading intraday, it just helps you to make those decisions even better. So looking back at crude oil, looking at the hourly chart, and then trading the daily chart relative to that, then you can see based upon the hourly charts all the way back into December that you can see right here. Okay, there was the floor. You can see the demand zone where price hit the floor and basically came to a screeching halt and then started to reverse off of that, and once it broke prior resistance, it never looked back. Came back and retested, continued on. Always goes back and retests the prior zone. That's when we call it the money bounce. That's when we call it the money bounce. Comes out and always comes back and retests that. So you can see a continuation of direction. So the daily showed you the directional intent. So always trading in the direction of the longer time frame will always be your friend. So looking at volume relative to multiple time frames is a key to making sure that you're trading in line with the intent of the market. If you're scalping crude oil, always be careful. Make sure that you have done your proper due diligence for the day. I like to trade crude oil in pre-markets just before the current market opens, and then I trade it through the day. The signals that come are usually really good. If I don't see any signal for a trend or entries at 6 o'clock or within before that to up to 7 o'clock, then I usually won't take the trade. But I will look for those. 6 o'clock in the morning is a great time to be looking for small breakout trades prior to the market open. And then after that, the market will generally signal to you the direction that it's going. And I like to see that. Marcel says, look at the pound. Okay, well, let me see if I can pull up that pound here. 3 minute, which one? Pound to dollar? Or you're talking about the tomahawk? Yeah. I'll pull up the pound. There we go. Yeah, when I broadcast, it really slows down my net, so that's why I'm getting a little bit slow response on the data. Oh, that is nice. Look at that. And it's coming back strong on the shorter term. So you can see relative Canadian, relative to the dollar, those probably are the two best. Here you've got your dollar. Here you've got your Canadian. It's doing quite nicely against the euro as well. Relatively weak. New Zealand has also come back. It was like bare bones. No lights were on at all, but now it's starting to come back as well. So that looks really nice. It's really nice to see from the scanner the time frame set up, the longer strength versus the shorter term strength. And when the lights start coming back on, that's 1, 2, 3, 4, 5, 6, 7, 8 minutes that you had time to set up and to identify that and to take advantage of it. If you're looking at trading it a little bit longer, the 1 minute gives you the setup. The 3 minute gives you some really nice entries. If you're trading the 3, confirming with the 1, then that's great. Yep, so here are the 3 minute charts. Looks like I have it set up for large screen, so let me turn that up there. Yeah. So I set up for an expanded screen there. Yeah, that looks nice. Good eye, Marcel. So anything trading with strength on the pound relative to the other markets are going to trend nicely in the direction of the major markets. So all of the currencies are going to be up relative, except for the euro, which will be down. The New Zealand and Australian are both strong, so they probably won't be trending. They'll probably just be correcting. Very nice, thanks. If you're trading ticks, yes, you can trade ticks with Hawkeye as well, even the forex market. So this is an indication of the current ones we were looking at. Let me pop another one up. We were just looking at, what was it, the pound to dollar? There we go. What it does is that it gives us a calculated tick value, which has been optimized based upon the current volatility and volume expansion in the market. You can see over time that volume contracts and expands based upon the current market conditions. So you can see based upon that expansion and contraction, the optimal speed that you need to set your ticks to. So if you're always trading off of a fixed tick speed, you'll find very quickly that the market some days look really nice, but other days doesn't look very good at all. But with the Hawkeye gearbox, Those days are over. You get optimized speeds for every single day, optimized based upon current volatility and volume. So this one says a 344 should be the time frame we're looking at here. A 688 on my yellow chart, and the red chart should be at 1376. There. Now that those are all set, then these are the time frames I'll keep all day, and then tomorrow it'll give me a new time frame to set. So based upon that, I'm looking at about a 4.1 minute price bar relatively. So you can see that I'm very, very closely coming into an entry point here. I do have a green trend, but my second time frame heat map, you can see right here, is still red. My third time frame volume has turned white. See that? But it has not turned green yet. So if I were to take this as an entry, I need to wait for my second and third time frame to confirm. And I can see those right here based on my roadkill. My roadkill, when they do confirm, will give me these confirmation dots that identify the longer term trends have aligned with my shorter term trend and have given me entry opportunity. And of course, the fat man is set up on a 20-minute. The rule of thumb is to try to take the base time frame, multiply it times 3. 3 times 4 is 12, so 20 is close. I can make that a 12-minute if I wanted to see an exact value for trading that. So looking at my pound, you can see my pound on a 12-minute is right at fair value. The US dollar is overbought but trending down. So if this dollar pound crosses and starts trending against each other, then you'll see that this trend line will continue. If I go to a longer term 20-minute, then you can see again pound is still at fair value and the dollar is rounding off. If I go to longer term, then you can see we saw earlier from Tomahawk that the longer term was extremely weak on the pound but strong on the dollar. But now you can see both of those are trending in the same direction, but the pound is still relatively stronger than the US dollar. The yen cross looks to be better for the longer term, but in the shorter term, see, I'll put a 15-minute on that. Probably looks relatively good. In the shorter term, you can see that pound is still trending with weakness, not with strength. So this might only be just corrective on the short term. If this continues, it could cycle right back up again. But for now, this might just be stopping right at this overhead right here. So it's established longer term into a downtrend, and we haven't gotten that break yet. We're in a downtrend also on the second time frame. So that's why you haven't been given the go ahead to take this as an entry if you're trend trading. All right. So that about does it for me today. Again, watch for the news coming out on crude oil. Crude oil inventories are coming out here in about 2 minutes, so make sure that you're not in the market. Looks like the market is very well stabilized. Let's see what the news has to say about that. Let me pull up my news page. Crude oil inventories are coming out. They have previous numbers were -7, current numbers are -3, so that means that it is reducing. Okay, so they're not expecting as much of a stockpile, so that means there's a high probability for the price to go down. So if supplies are increasing, and that's what this expectation is, then that means that the price will probably go down unless we see some alternative direction of the US dollar that can offset that. But right now we're looking for that to potentially, if it comes out with a surprise, to affect that negatively to the downside. and we're already starting to get some push downs. So watch the break below 62.84. Break below that, confirming close will give us a 61.98 target to the downside, and so you're looking for a good $1 plus. So you're going from right now a 63 to a 62, so you're looking for at least $1 price move to the downside. But don't just take it, you know, as information. Then just take it based upon the signals. The markets I've seen time and time again that you get bad news, the market initially reacts to that, but then turns around and starts trading back again. So trade your plan. Trade your plan. If you don't plan your trade, you plan to fail. So trade your plan. Make sure that you're not a failing trader. Make sure that you are a consistently profitable one. And Hawkeye tools are here to help you to do that. Make sure that you're trading safe and you're minimizing your risk at all, every turn. Can you adjust alerts? Yeah, anytime. So say the trend out here, and you're looking for the trend to turn red, then on this particular one, you can go into the inputs. That's sorry, volume paint bar. Let me go to the trend indicator itself. Here's the Hawkeye trend and stops. If you go to the alert setting, then enable the alert, and then you can tell it how it does. So it will automatically generate an alert every time the trend color changes. So if it goes from white to red, then it will identify that and it will send you an alert. And you can even have that alert send you to the global messaging center. You can give it your phone number and it'll text you, or it'll give you an email or something where it'll either continuously tell you or it'll only do it once and so forth. So you can have the opportunity to enable that alert on there, okay? And within the indicator itself, then you can show the alerts and by turning them on or off, and you can show the stop alerts as well by turning them on or off. But you have to make sure the system has been enabled so that that alert gets published. Okay, awesome. I'm glad everything's up and running for you, Philip. I'm always glad to see that. All right, this is a wide bar, so you know wide bar rule prevails. You cannot take a trade immediately following a wide bar. Wait for 3 to 5 price bars. So you're going to be waiting another half an hour if it doesn't confirm by then to take that trade. Then you're waiting for a close above or below the wide bar. Once you see a close above or below the wide bar, then that is establishing a trend in that direction. If after 3 to 5 price bars occur and you see a break or not break, but a new trend established, and if that trend meets all of your criteria for entry, then you're allowed to enter the trade. And only then can you take that trade based upon Hawkeye rules. And of course, you can always modify the Hawkeye rules to suit your own trading style, and that's okay. We highly recommend that you trade a trading plan that you can trade. We provide you with our information, with our trade rules, and with all the data we can, but we know that you are an individual trader, and so you need to trade based upon your own capabilities, your own risk-reward criteria, and all the bells and whistles associated with it. Okay? So if oil came in at minus 4.9, it is a little bit higher than expected. So supply is not quite as high as they were expecting it to be, but it is still a much higher supply than normal. So the inventories are only decreasing by a smaller amount. They're still decreasing, they're just not decreasing as much. And it is decreasing more than they expected it to. So that actually can be seen as a bullish indication. Because they are still declining. So that is still bullish overall, longer term. So less supply. Yeah. So it is going down. So does that make sense? They were expecting the decline in inventories to decrease. It didn't decrease as much. So we're still seeing a decline, but not as big as they were expecting it. So that actually can be bullish, even though it's smaller than this, that's bearish. It's not as small as expected, so that could be bullish. And it could have already been priced in as well. Now this tells you something. The volume on that news bar was bullish, buying. Okay, so it looks like a lot of intent is going into that. So we'll wait for that. Wait for this 3 to 5 bars. So we're looking at another 15, 30 minutes to wait to see if a trend direction comes from that, and then you take that as your trade. Awesome. Thank you guys for being with me today. I'm going to go ahead and stop the recording at this point.